Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and those 10-year note yields higher after new Fed Chair Powell gave his first testimony to Congress. I think the Fed Chair was able to lay out his plan. Most importantly, I think, as he introduced himself to the world and Congress and kind of gave us what he saw. Yeah, he's going to maintain, I think, rate hikes gradually in 2018. He's going to maintain the balance sheet runoff that was started by Yellen. However, I think what the markets may have been anticipating was that this was going to be a continuation of the Yellen administration, sort of a Yellen 2.0. And instead, I think we're going to see Powell 1.0, where he agrees, I think, with a lot of what happened with the previous chair and Yellen and what she did. But I think moving forward, there's going to be some tweaking that may be done. Nothing that was set in stone today, but I think he gave the markets the idea that as things change, he will change things from the Fed standpoint, and that is, I think, very important. And we saw the markets react accordingly. Yields in Treasuries rose. We saw them push back up towards those recent highs of 295. We didn't quite get there, but we did get above 290. I think right now that this becomes not only about how high can yields get, but when will they get to 3%? That's been the bullseye for several months now, and I think it will continue to be so until we get there. And then the big question becomes, how much higher can they go, and what effect will it have? What ripple effect will it have on other commodities and equities? And so those are the things I think we're going to be looking at. But right now, a little bit of a bearish tone in Treasuries after Powell spoke, because I think there is that uncertainty still out there as how high could rates go this year. And that is really what's driving the market. If you look at implied volatility, it's telling you the exact same thing. Implied volatility settled roughly unchanged today, which is unheard of after a main event. Typically, we build up volatility ahead of an event. When we get to the event and we pass by it and everything seems to be okay, volatility gets crushed and fears are pushed aside and sellers come in and take advantage and the greed train takes over. That did not happen today. It didn't happen really, I think, across the board, because as I said, there's still a lot of uncertainty as to exactly how he'll react to certain situations, whether it be equities, whether it be the Treasury curve, whether it be an upset apple cart in growth or something of that effect that would really cause the Fed to have to change what they want to do, and how will he react to those changes. And lastly, let's look at the Treasury curve. Obviously, rates are going higher, right? Steeper yield curve. Not exactly. Really, the front end of the curve underperformed, and the back end of the curve, while yields were higher, the speed of the moves were a little bit off, and we did see the curve reflatten again. Certainly not to the levels that we saw a few months ago, but it's starting to get to the point where the back end of the curve's caution is now starting to really speak volumes. So those are things that the new Fed chair will have to address. Maybe we'll see that addressed at the March FOMC press conference. More likely something he'll address intermeeting at one of his speeches as we move further into his policy and administration. But right now the market, I think, is still waiting for that certainty, waiting for something that they didn't get today, and that's clarity from the Fed chair, who just introduced himself to the markets and will continue to do so in the days and weeks ahead. That is something that we can get used to. But right now, I think the markets he didn't come in as Janet Yellen 2.0. That's why we're seeing rates go higher. That's why we're seeing stocks go lower. But again, this could all change very quickly as we get to know our new Fed chair in the days and weeks ahead. This is Todd Colvin coming to you from the floor of the CME Group.